Hello everyone, my name is Advocate Dexter Ochla, and today I will be just going over the inflation and the high interest rates and the economic slowdown. So basically the two websites we can refer to are the Freddie Mac and the Fred Economic Data. These are the two websites one can go and look into. The interest rates have gone up. As a result, there is a high rate of mortgage delinquency among the low-income people. And when the interest rates rise up, the property values fall down. And as you can see, the property values have come down to about 10 to 15%. And the people who bought the property in 2022, they've already lost about 10 to 15%. And the people who will be buying the property, they are in a better position. But again, the interest rates have gone up. So it's like a give and take situation right now we are facing. And with the valuation of stocks, the stock market has come down. So our economy is definitely going towards the recession period. And as a result, what the Fed has done, it has increased the interest rates. So the interest rates in the beginning of 2022 were around 2.5 to 2.9%. And as you can see, they are around 6.75 to 7% all across the U.S. right now. And as a result, the ability to pay mortgages for the low-income people goes very, very up. And as a result, if they default on their mortgage payment for 6 months or more, the bank forecloses on their property, and the property goes into auction. And what happens is, when the property goes into auction, the bank has a pool of their own investors. They pay cash for the property and they get that same property at a lower price. So this is exactly what happens, when the property is foreclosed and it goes into auction. And basically, the government is saying, that they've given unemployment checks, stimulus that will pump the economy. I agree with that. With unemployment and stimulus check that the Fed has given, the economy does do better. But that is at a short term. At a long term, what the government or the Fed is doing is, it's correcting the very high house prices by again increasing the interest rate, which I can see it's a normal move. And right now the Fed rate is about 3.5%. I think it will stay at about 3.5%. It will not go up to 5.5%. And the 60-year mortgage rate has been, the average has been about 9% if you look at the averages. And the highest it went was 9.5% in 1990. So at 7%, I firmly believe, I don't think it's going to go up more than 9.5%. I think that's the highest it has gone. And again, that was just because the house prices were so hot, that was just to, auto-correct the market. And my advice would be, wait for the low interest rates, wait for the prices to fall down and then get the houses. But that's an individual decision, because realistically, most people get homes because they want a better neighborhood for their children, and they want better schools. And then, as a result, they want to get better homes, but then then there's layoffs. Tech companies are laying off right now, but then again there's new companies that come up and the economy gets better, then they hire more people. So what we are seeing is a lot of retailers, they've gone out of the low income home areas and they've moved their retail operations to a higher income area because of excessive shoplifting. But then again that has to curb out. Time curbs everything out. So that's my thinking, that that what goes up will come down. So we have to wait, and those of us who have good jobs, who love life, who are living the life with stable income and stable jobs, they have a better opportunity to get into the housing market when the homes are at a lower price and the interest rates are at a lower price. So that's up to them. That's again it's an individual choice. It depends where we are at in our life to get a house. So basically Fed again Fed is controlling everything, in order to control the inflation and so that the economy recovers. And which we are seeing, and the rate is a little bit slow. We want everything fast, but things move at their own pace. So that's just my own opinion on it, and you can take it or leave it as it is. Thank you so much for watching Law Informatica. Thank you.